Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Stock market slides. Well, I warned several weeks ago that August and September can be tricky months for the stock market, and so far, August has lived up to its reputation with the S&P 500 index down roughly 4% since the beginning of this month. Now, it's no coincidence that markets have run into headwinds at the same time bullish sentiment has reached its highest levels of the year. When everyone's bearish, like they were at the beginning of the year, the market's more likely to surprise to the upside, like it did during the first half of the year. However, when optimism reaches a fever pitch, stocks can become vulnerable to bouts of volatility. And this optimism turned into a bit of a mania mid-July as investors jumped on the AI bandwagon thinking that stock prices were destined to climb ever higher. Now, there are fundamental reasons to expect some further turbulence in the stock market as well. Earnings estimates have been drifting lower all year. The silver lining could be that the rate of those estimate reductions has in fact slowed, so the rate of change trend is actually moving in the right direction. If, and it's a big if, there is no further deterioration in corporate profit expectations for the next few quarters, it's likely that any equity market volatility here this fall could be relatively short-lived. For this week's featured insight, interest rates drive everything. Well, most people pay very little attention to interest rates unless they are taking out a loan or perhaps buying a CD. Let's face it, interest rates are pretty boring. Nevertheless, interest rates are the center of gravity of the financial and economic universe, so you should ignore them at your own risk. Interest rates are at the heart of how all financial assets are valued, and they drive decision-making for business investment. Now, rising interest rates have clearly been a key source of financial market volatility during the past 18 months, and the accumulated debt and future borrowing needs of the federal government could continue to put upward pressure on longer-term interest rates. Looking ahead, data vacuum. So with second quarter earnings season now nearly over and very little economic data to be released in the next week, we're in for a bit of a data vacuum. Now, after a modest pullback that we've seen here in stocks over the past few weeks, this could come as a welcome reprieve, as many times no news is good news. On the other hand, markets could begin taking their cues from the volatile news headlines that they've mostly ignored so far this year. Russia-Ukraine, China-Taiwan, and I won't even go there regarding the perpetual circus in Washington. But there are obviously plenty of things to hold investors' attention. In the meantime, we'll be managing risk and seeking out opportunities to take advantage of any further volatility. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.